Good afternoon, everyone, and welcome to the third webinar of the fall session of the 2021 IMOS webinars. My name is Caterina Giusti. I'm Professor of Statistics at the University of Pisa in Italy, where this session is hosted. And today I will also act as the webinar facilitator. Now, let me first explain for any newcomers that IMOS stands for the European Master in Official Statistics, a joint project of universities and data producers in the EU member states, EFTA, and EU candidate countries. If your university is interested in applying for the IMOS label, please consider that a permanently open call for universities is available on the IMOS dedicated page on the Eurostat website. For staying in contact with the IMOS news and community, please follow the IMOS Twitter using @EU_IMOS. It's now time to start with our webinar. Before I give the floor to our speakers, let me first explain briefly how we run the webinar today. As in the spring session, the IMOS webinar stream on the IMOS YouTube channel, where you can already find the recording of the past webinars. As a participant, you can watch and listen to the webinar. To use the chat to interact with the presenters, you need to log in YouTube using a Google account. We encourage you to prepare your questions and pose them to the presenters during the presentation or the final discussion. Should you have any technical problem or questions, please send us an email to the email address that we will indicate in the chat. So today I have the great pleasure to host several speakers. We have Maria Lundsky, Olivier Chapiteau, Xavier Roy, and Cristiano Tessitore. Maria Lundqvist is Finance Advisor at the Innovation Finance Advisory at the European Investment Bank. Her area of expertise is within innovation, the digital economy, and emerging disruptive technologies, with a particular focus on deep tech, AI, blockchain, and quantum technologies. Maria is one of the authors of the recently launched European Investment Bank AI and Blockchain Access to Finance study, and she is currently dedicated to advancing the twin transition of digital and green. Olivier joined the European Investment Bank in 2012, where he first worked in the derivatives risk management and quantitative analysis before moving to capital markets 3 years ago. Prior to his time at the EIB, Mr. Chapiteau had focused his career on risk management in various institutions in Paris, London, and Tokyo. Xavier has 15 years of banking experience. He joined the EIB in 2009, running the Eastern European funding portfolio before taking over the responsibility of the GBP funding program for the institution in 2011. He managed, among other things, the third public tender of the EIB in GBP. Since 2019, he has been part of the team focused mainly on all new risk-free rates. And Cristiano Tessitore is a statistician working in the unit responsible for methodology and innovation in official statistics at Eurostat. He is managing the European Statistical Training Program and leads a project on the application of blockchain to official statistics. So today, our speakers will present about artificial intelligence, blockchain, and the future of Europe. So I leave the floor to Maria, our first speakers. And so please, Maria, you can start. Thank you.
Thank you very much for this introduction, and also thank you for inviting us all here today. So indeed, we're going to discuss a little bit on when it comes to artificial intelligence, blockchain, and the future of Europe. So me and my two colleagues from the EIB, we will obviously discuss from the EIB perspective, but then we will have a colleague from Eurostat joining as well. So the plan for today is the following. So first, I will go a little bit through the EIB group, which you may or may not be familiar with. So I will explain who we are and what we do and the role when it comes to fostering innovation in Europe. And then moving on to the specificities of these two technologies, so looking into the strategic importance of artificial intelligence and blockchain, looking as well into the, as Katarina mentioned, that in June this year, we published a study on exactly these two technologies. So I will go through a little bit on the key findings and the recommendations, and then moving on. So from this market intelligence to take it more on a practical level. So how do we support within the EIB? And then my colleague from the Capital Markets Department will take over and explain a little bit more on the exciting launch of the EIB blockchain bond. But okay, first let me start. So the EIB, which is the European Investment Bank, so we are the bank of the European Union, and we are owned by the 27 member states, and we are also actually the world's largest multilateral lender by volume. And the European Investment Bank, so on the one hand, the European Investment Bank Group consists of the European Investment Bank, where all the three of us work. But then we also have the European Investment Fund, which is a subsidiary, and EIB is the main shareholder. And overall, the bank was established in 1958. And since then, we have in total invested around 1.5 trillion euros. And only last year in 2020, the EIB provided finance for around 66 billion and 13 billion through the EIF. And we are also the leading provider of climate finance. So really we focus on green investments, on sustainable investments. And now we are also officially the EU's climate bank. And last year, 26 billion contributed actively to climate action. And as mentioned, so we are governed by the EU member states, and we are also founded by the EU member states. And we are headquartered in Luxembourg. So I'm in Luxembourg today, and my colleagues as well. But we also have more than 50 offices around the world. So in each and every EU member state, but also beyond, where we have mandates to operate. And in total, we are roughly 5,000 people, including or plus consultants. And we are not only finance people working in the bank, but we also have engineers, we have economists, we have social or environmental specialists, and also when it comes to gender. So it's really a broad bank, let's say, and probably not the type of traditional bank that you may be familiar with. So looking a little bit into the priority areas that we have. So we get our mandates from the European Commission, and we have overall four broad priority areas, which is innovation, environment, infrastructure, and small and medium-sized enterprises. So here you also see the figures that was lent to each and every of these priority areas, and you can see that it was 14.4 billion under the innovation envelope, 16.8 for environment, 15 for infrastructure, and 30.6 for SMEs. So this is some overall figures on what we do and what we focus on. And then when it comes to our support specifically for innovation and digitalization, and here is also included human capital and skills development, because the aim is really to support ideas, to support cutting edge technologies, really from the development stage, but also for deployment and adoption by larger corporates and by the public sector as well. And since 2000, we have supported innovation and skills with more than 220 billion of investments. And in last year alone, as you saw on the previous slide, that we provided 14.4 billion to really support this innovation and R&D activities. And this can be seen in a number of forms. On the one hand, supporting the development and the commercialization of new products, of processes or business models, but also promote investments in R&D, in education, in upskilling and the training. But also when it comes to, for example, digital infrastructure, so improving connectivity and more broadly access to the digital world. And also one area that is coming more and more is really on the emerging disruptive technology side, which we will, of course, discuss with you here today. Just to give you a very, very brief overview. So here you can see all the products, not all, but some of the products that we offer from the EIB Group's side, which you can see it's linked to this stage of development of a business. So if you start a company, you typically start at small scale, where you are on the pre-seed stage. You need to start raising small amounts of money. Probably you tap into your own resources in the beginning, but then as the business grow more and more, you need more financing, and then there are various options you can look into. And what we have here at the earliest stage that we offer is from the European Investment Fund side, which in turn they don't do really direct investments. It's typically more of a fund approach, but therein comes in technology transfer funds or venture capital funds, or more dedicated to SMEs. But then as the company start to grow, the EIB can step in, which we have a product called venture debt, which is a quasi-equity type of financing. And then the bulk of our business actually concerns debt financing, either to corporates, so on the private sector, but also to the public sector. And apart from direct financing, we also do quite substantial when it comes to intermediated lending. So we lend the money to banks or other financial institutions, which in turn lend the money to the SMEs, and that's typically how we reach out to the very small companies. So I think that's about it when it comes to the EIB and how we function. And of course, if you have any questions, feel free to ask. So here you will see a QR code, and if you scan this one, you will come to the website where you can actually download the report that we published, which, as mentioned, was in June this year. So, but to start off a little bit when it comes to these two technologies and why we also speak about them as typically disruptive technologies. So first we have artificial intelligence, which is really the theory and the practice of building machines that are capable of performing tasks that seem to require intelligence. So that includes, for example, machine learning, artificial neural networks, or deep learning. And then when we speak about blockchain, and here I will leave it for my very knowledgeable colleagues to actually go through more in depth how it works with blockchain. But overall, you can think a little bit of AI as the thinking part, and then we have the blockchain, which is the remembering part. And obviously, these two technologies are distinct from each other, but sometimes they can also work together in certain applications. And as mentioned, we speak a lot about these two technologies as being strategic technologies. And what do we mean by that? It's really that they are transversal. So they come across in all sectors, or in I would maybe not say all, but in many sectors, and the potential for the technologies in the future is even larger compared to what has been where they have been adopted so far. So just to take a very few examples when it comes to the retail sector. So here we're speaking about e-commerce or supply chain management, or in the financial industry, because here blockchain really have the or blockchain-based technologies really have the possibility to increase transparency, and through smart contracts. It's again, we will come back to this later, but also on the artificial intelligence side, it can help to automate decision making and improve internal bank processes, and also when it comes to real-time validation of client transactions, for example, against the payment fraud. Here also AI can play a large role. And then when we come to the production, so on the manufacturing side, we speak often about, let's say, smart manufacturing, which means that there is some type of intelligence in the machines themselves, so machine to machine communication or machine to human. Also when it comes to predictive maintenance. And then also, of course, in the energy sector, which comes in the whole thinking of sustainability, of green, and the transition to a more climate-friendly economy. And here, when it comes to smart meters, so matching supply and demand in real time in a better way than what has been done so far. And as mentioned, that AI and blockchain is really set to play a central role in the success of the twin transition. So the transition, both moving towards green and also moving towards a more digital society more broadly. So exactly, here you see a little bit about what I mentioned exactly right now, that they can actually, these two technologies can on their own, but also together really help us to tackle this digital and climate challenges that we are seeing right now. And of course, the opportunities go beyond artificial intelligence and also involve, for example, space or Earth observation technologies, or 5G play a role here, or quantum technologies. But in particularly, when we speak about AI and blockchain, so building a little bit on what I said before, when it comes to, for example, energy. So here it can help in improving electricity forecasting, in scheduling and control, and also when it comes to the transport sector, so mobility, and also in real time allocate traffic flows and optimize routes for trucks, for example. But then there are also in many other areas, such as agriculture or the forest industries, where more and more AI-powered, let's say, intelligence comes into many of the machines, for example. And actually, yes, this is quite an interesting one. I recently read an example of blockchain technologies that has been used really to increase transparency and security in the energy sector. Because there, if you get the energy, you cannot be sure where it comes from. So if your energy supplier says that it's going to be 100% renewable energy, you cannot really for sure know unless there is some smart mechanism that actually allows that type of transparency. And also what I would like to mention is that there is a very important dimension of all this, which is the ethical dimension of new technologies, and how it also puts some challenges to our ethical concerns. So it's important when speaking about all these technologies that we keep this trustworthy, ethical, human-centric approach in mind, and also reflect a little bit on what is the role of governments and policymakers, what is the role of the private sector, so on the corporate side, and also what is the role of finance, and what is the role of us as a bank financing all these technologies. So to go back a little bit to the study, so how we did it. Yeah, so we based the overall study on market analysis, on various types of surveys, but also more on the qualitative front, so in-depth interviews. And the objective was really to provide a set of recommendations and actions for improving the access to finance conditions for AI and the blockchain companies in Europe. So what did we then find? So okay, firstly, in a nutshell, what we did is that we analyzed it from the demand side, so from the companies, from the startup side, and also from the supply side, so from when it comes to the banks, to the investors, to the financial institutions, and also the market matching system, so the overall innovation ecosystem, let's say, and the value chain. And firstly, so what we saw was that when it comes to the supply side, and now we are taking a very European perspective here, so the competition for global leadership when it comes to AI and blockchain is really speeding up, and there is tremendous amounts of money and increasingly also more and more going into investments in AI and blockchain companies around the globe. And however, despite a tenfold increase in European investments in AI and blockchain over the past 3-4 years, so the overall availability of venture capital funding remains the key issue for Europe. So here, I will just see if this is, yeah. So here, really on the volume side, you see that Europe's share in the global AI and blockchain equity investments is much lower compared to other leading regions. So Europe accounts for only 7% out of the total 25 billion euros that was invested in 2019, whereas US outpaces all the other regions. And then we also have China accounting for a large chunk, and the other countries still have more than Europe together. And here also we are speaking about the European member states. So for example, UK is a large contributor to these the pie of the other countries. And then I think I will just go. Yeah. Okay. So then what we also saw was that in particularly Europe is lagging behind the other regions, not only in total volumes, but also, I mean, as you saw, for example, when we look at the financial instruments across the business life cycle. So here, Europe particularly lags behind in the later stage of financing rounds. And the gap, we analyzed it both from the equity perspective and the debt perspective, but the gap here is particularly related to the equity side. And this also, of course, has to do with the quite immaturity of these technologies, and especially when speaking about blockchain compared to AI. And that is also a key finding that we saw. I will just go back to this one for 1 second, because then, of course, it's not only about volumes, and you see here also point 2 that it's a bit of or it's a lack of specialization, because in Europe we are lagging the type of specialized investors that can really understand these technologies, because the problem with the more and more complex the technologies get, the more difficult it becomes for the investors to understand, and hence also it's easier for them to step out of potential deals. Because, I mean, some of you are economic students, and then I know you are perfectly familiar with the concepts of asymmetric information and that type of market failure thinking. So that is really how to bridge that type of asymmetric information gap. So from okay, no, I will not go through any more on this. I'll let, yeah, because I don't want to put a completely dark picture, because that's actually not the case. Because another key finding that we saw is really that Europe has very strong fundamentals, and with fundamentals I mean especially when it comes to skills, when it comes to talent. We really see that Europe is at the forefront, of the global forefront, when it comes to AI-related research, for example, with a lot of very very good and highly skilled digital talents, which it should really aim to capitalize on. So to not miss out on this opportunity, we identified 3 major areas that needs to be improved. So on the one hand, it's when it comes to the development. So really we need to do more to boost financing for development and scale up. And then when it comes to deployment, so once these technologies have been developed, or of course this goes simultaneously, we need also to support the take-up and the adoption of AI and blockchain technologies in the market. And then as the third key recommendation when it comes to innovation ecosystem. So here we need to create a more friendly and integrated European innovation ecosystem. And here we are in particularly looking into the type of digital innovation hubs and other type of innovation accelerators. So just very briefly, so what is then, now we heard, okay, this is the problem, what can we do, and also what do we recommend that we should do. So I'll just give some insights into what we actually do at the European Investment Bank when it comes to supporting these technologies, because indeed, I mean, this is something that we do and that we see is key, and that is also why we are working on looking more deeply into this market. So as mentioned, innovation and skills, here also come the technological developments, of course. And in particularly for AI technologies, over the past 2 years, we have invested more than 2 billion into AI technologies, and this includes in particularly smaller companies. And when I say smaller companies, we are still speaking about scale-up companies that are looking for financing in the range of, let's say, 7.5 million, 15 million, 30 million, and above. But then we also launched 2 more dedicated instruments. So on the one hand, a co-investment facility that was set up, so where the EIB can invest alongside the European Investment Fund. But then also from the EIF side, a particular innovation equity pilot of 100 million dedicated exactly to AI and blockchain startups in Europe. And then, of course, also through the debt type of financing that we have within the EIB, we also have the opportunity to support companies' R&D budgets ring-fenced to AI or blockchain, for example, or as a part of a larger corporate loan. But now that's all for me, and I will leave the floor to Xavier. Thank you.
Hello. So I hope not I hope that some people are still awakened. But in any case, I will do my best to explain what is blockchain, because we've been hearing for quite some time now about the investment that EIB is making to support blockchain and so on, but you don't necessarily know what blockchain is. So in 2 words, so my name is Xavier, and I was the lead architect behind the blockchain issuance of the bond. And first, I wanted to explain you a bit what blockchain is. So in the old world, when you had to store something, you were going to the bank, okay, and you could open an account and get a safe, and then you could put your diamonds and your gold into that safe, okay? And that's the way it worked. But in the new world, in the digital world, very often what is valuable is information. And then it's very important to know how you can keep and store that information. And that's where blockchain comes. So you have to think as blockchain, you have to think of blockchain as a safe. So I stole some toys from my kids. So I don't know if you see something like this. So imagine that this is a block, okay? And you can think about it as a safe that would be in a bank, okay? And let's say that we are going to put some information on that in that safe. So let's assume that I want to sell a guitar to you, okay? So in that block, I will put all the information saying, okay, well, my name is Xavier and I'm selling you a Les Paul Top Gold 1969 and it has these characteristics and whatever, and this is the price and so on. And some of you are interested. So what are you going to do? You are going to buy that guitar from me. And so we are going to register that sale, okay, in another block. And then now in that block, we can write, if you want, the transfer of ownership. It's not my guitar anymore, it's your guitar anymore. It's now your guitar. But it turns out that after a while, well, you don't really have time to play so much because you're very busy with work or family or whatever. So you decide to lend that guitar to your neighbor. But given that it would be a fairly expensive guitar, you will need to write a contract and say, okay, it's only for 6 months, and then you will pay me so much during the rent and so on. So what do? Well, you do this renting contract and you write all that information into a new block. And once you get the guitar back after, I don't know, 6 months, you realize that, well, you will never really play it, and you inquire to sell the guitar. So you contact me again to see whether by any chance I would be interested in buying back my own guitar. And it turns out that, yes, I would be interested. So what would we do? Well, we do a new sale contract where in that case, you sell the guitar and I'm buying it. So, and that's the new contract. And if you can see from an economic point of view, we are exactly back to square one, okay? I have my guitar back, you have your money back, nothing happens. But you can see that all along, all the informations and all the steps have been stored into the blockchain. And in each block, you have some information. And at the end of the process, you are left with a chain of blocks, hence the name blockchain. Okay, so that's why the technology is called blockchain. And some important characteristics of blockchain, because I think some of my peers will need to use that information, is that blockchain is permanent. Okay, so even if in the future I were to, I don't know, I was deciding to sell that guitar again, we could still see everything that was going on. So even if in 2 years I decide to put that guitar for sale again on the same blockchain, well, some people could see that, okay, that guitar had been sold already some time ago, and there was a different owner, and then the guitar was rent, and then it was sold back, and so everything would be completely traceable. And I think some of the key characteristics would be that blockchain is very safe because all these blocks, they are linked by a mechanism called the hash, and it works basically like a fingerprint, okay, if you want. So each block contains not only its own fingerprint, but it contains the fingerprint of the previous block. It's I don't want to get too much into detail, not to make things too complicated, but what it means is that nobody can really alter a block without having to alter all the blocks. And you have to think about it exactly like these blocks. If I wanted you to remove that red block and put a yellow block instead, okay, like tampering with the data, basically, you can't. I mean, it's physically impossible. You can't do it. The only way to do it is to break the chain, okay? And then you need to break the chain to remove the block that you want and put another block instead. And when you break that chain, everybody will be able to see it, okay? And that's what the hash is all about. So it ensures the security of the blockchain by making sure that people cannot tamper with that. The security is even enforced even more because when we speak about blockchain, we speak about decentralized ledger technology. And the decentralized part is very important because this means that this series of blocks is not stored in one server. It is stored in thousands of computers around the world, which means that if you want to hack the blockchain, not only it's very complicated because of this hashing mechanism, okay, and this encryption, but not only would have to modify one version of the blockchain, but you would have to modify all the versions in thousands of computers across the world all at once, which is virtually impossible. Okay, maybe in the future with quantum computing and so on, it could be possible, but then it would be a very lengthy debate on what it would take and so on. But at the moment, it's considered to be very much impossible. So the technology is extremely safe. So that's blockchain in a nutshell. Some maybe key concepts that are worthwhile to highlight is that very often blockchain is confusing for people because a lot of words are being thrown around without proper explanation. So I will try to be very brief about some key concepts, because if you don't understand that, you can't understand blockchain. So blockchain is the technology, okay? And then you have different protocols. The protocols can be, for instance, Ethereum, or can be Bitcoin. Those are the two most famous ones, okay? And what does it mean exactly? You have to think about a mobile phone, okay, for instance. So, okay, here I have two mobile phones, okay? That's an iPhone, and that's that's a phone working, that's the iPhone, and that's the phone working on Android. And so in order to make these phones function, you have what we call an operating system. Okay, it's a software that would allow you to send text message, to call people, to install applications, whatever. So that's the technology. That's the equivalent of blockchain. Okay, but then you have different practical applications. Android and iOS, so the Apple version, are different versions of that technology. Okay, different applications, and those what the protocols are. So Bitcoin and Ethereum are different applications of generic technology that is called blockchain. And what gets even more confusing to people is that very often these protocols, they have an embedded cryptocurrency that is part of the protocol. So Bitcoin has Bitcoin, and Bitcoin is mainly a protocol about payment, but Ethereum has a cryptocurrency called Ether. But you can do way more things with Ether. But you have to think about this way. If I keep my example of the phone, if the operating system is the technology, if Android is the protocol, or iOS is the protocol, Ether would be equivalent to iTunes. Okay, so maybe you have an iPhone and you are never going to use iTunes because maybe you hate music, or maybe because you like music, but you prefer to use Spotify or whatever, okay? So, and that's exactly the same case. So you can use an Ethereum network, but you don't have to use the Ether technology, okay? And the reason why I'm saying that is very important is the bond transaction that the EIB has been doing was run on the Ethereum network. But this is a Euro transaction. So the network is only used to share the data, okay, and to safeguard the information, like the blocks that I was explaining earlier. But our transaction has nothing to do with Ether. So if you are as an investor would purchase that transaction, whether Ether is going down to zero or whether Ether is skyrocketing to 20,000, it has no impact whatsoever on you. Okay, so we decided to use the protocol, but not the cryptocurrency associated with that protocol. So that's, in a nutshell, the key concept I think that you need to know about the blockchain. I think what is important to understand is that when it comes to financial markets, blockchain is not necessarily about creating new instruments. You can create new instruments, but it's mainly about using different means to transfer the ownership and transfer the data of existing instruments, okay? And okay, you could say, that's fine, but if you are doing the same thing as what you were doing before, why are you doing it on blockchain? And that would be a fair question. And I think the key advantages are the security. It's already an aspect that I mentioned. The speed. I'm sure that you've been trying to send money abroad to someone, and sometimes it takes ages, okay? And if it's in a different currency, so from euros to dollars or South African rand or whatever, it can take forever. And then you always wonder, okay, well, the other person, they are telling me that they did not receive the money, but is it true or not? Are they lying? Did they receive the money and they're trying to scam me or something? Or is it legitimately the case that they did not receive the money? Well, with blockchain, everything is transparent. So you can know that they receive the money or they don't receive the money yet, okay? And also with blockchain, it would be super fast. So you can transfer money across different types of currencies within seconds. Okay, some protocols are a bit slower than others, but with the fastest protocol, you can really do it in seconds. At the moment, in normal financial market, when you want to settle a transaction, which means to make sure that the cash and the securities are being exchanged, it will take 2 days. Okay, with the blockchain, you can do it in 5 minutes. So security, speed, and then maybe the main advantage is a massive reduction of cost, because at the moment you have to realize that whenever something is being done, like a bond is being issued and a coupon needs to get paid, so it's like the interest, for instance, on a mortgage. A lot of people have to intervene. So the EIB is issuing a bond, an investor is buying that bond, and the investor expects to receive interest payment in order for the money that they've been lending to us through the purchase of that bond. And what happens? Before the coupon, we have to calculate the coupon to make sure, okay, well, we need to pay so much money to these investors. And then we have a paying agent that also needs to calculate the coupon. Typically, I don't get into details, but we have dealers, so investment banks that are hedging that part, because we very often issue in fixed rate, but we prefer to pay in floating rates to manage our balance sheet, so to cover exposure on balance sheet. So then we have a swap associated with it. But for you just need to understand that a third party is even calculating the coupon. And finally, the investor that is supposed to receive that coupon is also calculating it. And even on some very plain vanilla product, even on very simple calculations, nobody ever agrees, okay? Because we all use different systems and there are always some rounding errors. And once again, there's no big deal because it's only a rounding error. But at the end of the day, we need to make sure, well, I need to send you money and we need to agree on exactly to the last cent, how much money should I be sending you? And then, well, people, they need to send email to one another, they need to call one another, say, okay, what is the exact amount? I see this is my calculation. Okay, this is your calculation. So I believe your calculation or your rounding is more correct than my rounding, so we'll use your rounding. It takes forever, okay? And that's a massive drain on resources. It's not eco-friendly either. It takes time. It's a source of operational risk. So by having the calculations done on the blockchain, because the blockchain, through the use of smart contract, I'm not getting into details, like a piece of computer code that can execute some calculations. The blockchain can calculate itself the value of the coupon. Well, everybody can access the blockchain. So everybody's seeing exactly what amount should be wired or received. So there is no dispute anymore. And you can also automate a lot of the processes, which means that you need less people to enter all this data manually, which also reduce the risk of errors or people messing around with the data and trying to, I don't know, we had cases with like Jérôme Kerviel, for instance, or Nick Leeson, like famous traders. They used to work in back office and they were trying to hide their trade because they knew the back office system and so on. Well, with the blockchain, you can't do that, right? So that's the main reasons, I think, why blockchain makes sense. And the benefits are so big that I think ultimately capital markets will move towards blockchain. The big question is, how long will it take? Because if you look at the first EIB transaction, the transaction that we did this year, in terms of market impact, it is exactly equivalent as the first email ever being sent, okay? So it's groundbreaking in that sense. But you have to realize that between the date where the first email was sent, maybe at the end of the 70s or beginning of the 80s, I can't remember exactly, and time when emails become the main means of communications, it took 20, 30 years, okay? And that's because the infrastructure was not up to speed, okay? If you're all students, you might all be too young to remember, but when I started to use internet, the modems were like 50K modems, and to download your emails, it took like 10 minutes, and if you had pictures attached to the email, well, it would take 20 minutes, okay? And so the infrastructure was slowing down the adoption of the technology. And this is very much the case with blockchain. So blockchain is groundbreaking, and I strongly believe that blockchain will play a significant role in the years to come. but some infrastructure aspects have to be addressed. I think that they will be addressed, but the question is how fast will it go? Maybe it's 3 years, maybe it's 15 years. That we don't know. So that's in a nutshell what is blockchain, why we are doing stuff in blockchain, and hopefully it was useful. So I will pass the floor to the next speaker. Thank you very much for your attention. Bye-bye.
Thank you, Xavier. So I don't know if also Olivier wants to add something, or if we go to Cristiano. Okay, so please, Cristiano, because we are a little late, then we will see a couple of questions at the end. Thank you.
Thank you, Caterina. Thank you for hosting me, and hello, everybody. I'm going to present you the project I'm leading about blockchain in Eurostat. It's called Blockchain Official Statistics. I'm Cristiano Tessitore, working in Eurostat A5, that is the unit in charge of methodology and innovation in official statistics in Eurostat. So, as said by Maria before, the blockchain is a technology that can increase transparency, security, and trust. This is particularly true in official statistics. So let's see a little bit how we can do this, we can achieve this objective. But before, let's have a look at some key concepts that were already touched by Xavier in a more technical way, let's say. So the hash, Xavier already talked about it. The hash function is a mathematical function that can be used to map any data to a fixed size values. So, for example, we can use this function in order to have a mapping between the word hello and a string of characters. And also the concept of blockchain that was already introduced by Xavier. That is a series of blocks. So a chain of block for that, and then blockchain. Every block is, of course, a container of a transaction and is identified with an hash that is a mathematical function, that is the application of the mathematical function on the data contained in the block. How it works, the hash function. We can use this mathematical function on a word, so hello. It can be hashed and gives a given string, but also a sentence, statistics is cool. We can apply the same function and have a different result. It can be applied also on a picture, in this case the giraffe, because a picture is merely a sequence of 0 and 1, and so for that reason the picture can be hashed as well and gives another result. And also a file. We can take a file that is again a sequence of 0 and 1, and we use this mechanism in order to calculate yet another string. Now, how we can translate this to the blockchain? The picture can be introduced into the mathematical function. So we calculate the hash of the picture, and we can put the hash of this picture into a block. In this case, in the example, we put it in block 51. We register the hash of the picture in a transaction, and all the transactions are contained into the block. The hash is then calculated on the block itself, and like Xavier said before, the hash is registered in block 52. So in the example given before with the Lego blocks, we have the hash of block 51 that is registered in block 52. Now, let's see a little bit how to apply this concept to the official statistics. You know that Eurostat produce data, and the data are stored in a database that is called Eurobase. We have several production systems, for example, SAS, for example, FAME, or another internal system that is called MDT, that produce data. those data stored into this enormous database. This database is published at given times every day with the new data that are produced by Eurostat in the Eurostat website. You can see this into Data Explorer, or you can see this in another section of the website where you can download directly the dataset. So every information that is produced by Eurostat is saved into this database and is published to the main public in a form of a file. You see in the example we have several files that were produced at a given time. Now, what we do with this file? We have the file that are produced by Eurostat. We can apply the mathematical function, the hashing function. So we hash the dataset produced by Eurostat, and we can register the information coming from this dataset in a block of the blockchain. In this case, we take 3 files and we register into 3 different transactions in the blockchain. So it's not the file itself that is stored in the chain. It's the hash of the file. So you can imagine that, for example, a file of several megabytes can become a string of some characters, and this string is then registered into the blockchain. So it's not the file itself. Now let's come to the BOSS project. We have 5 main uses for this project that are: check the integrity of a file, trust the source, file versioning, link a possible link to other statistical institute to enhance transparency, data transparency, and publication of main indicators in the block metadata. For concerning the first case, the check of the integrity of the file, it is simple. We have a file that is produced by Eurostat. The hash of this file is registered in a blockchain, but you know that you can calculate by yourself the hash of the file. So when you download the file from the Eurostat website or another website, and you want to check if this file was published by Eurostat, you can calculate the hash by yourself in the web, for example, and then compare with the hash that is registered by us in the blockchain. If the hash are identical, then this means that the same file has produced the same hash. So the file that you downloaded from another website is a genuine file produced by Eurostat. You can also use this to trust the source. Some journalists publish files and publish data saying that this comes from Eurostat. You can add a button like it is done by ANSA in Italy with ANSA check to check the genuinity of the data by looking in the blockchain the transaction. It is also possible to do file versioning with this because we publish the first version of the file and we register the hash in the blockchain. Then the researcher, for example, elaborate the result based on the first version of the file. After that, the routines are created by the researcher. The researcher wants to check if the version of the file that he has is the last one. So he goes in the blockchain and sees that the version 1 is outdated. Now there is version 2 because the hash of the file calculated by the researcher is not the same of the last version of the file, so he downloads the last version. Another possible use of this is together with the National Statistical Institute, because as you may know, Eurostat produce indicators based on the data received by member states. So any indicator produced by Eurostat can be linked to the data that are produced by the member states. So it would be possible to compare the hash in the blockchain registered by Eurostat with the files that produced the information that generated the information published by Eurostat. In this case, there is a link, a possible link between Eurostat together with the data produced by Istat and Destat. Last possibility is to publish indicators, the principal indicators, in the metadata. So, as I said before, we are not putting the file itself into the blockchain. We are putting only the hash of the file in the blockchain, but we can put some information also. We are not putting, in this case, the file about GDP. We are putting the hash of the GDP file together with some metadata. For example, in this case, we put in the block metadata the fact that the GDP in the EU for a given month and a given year is 2%. So it is possible to add this kind of information in order to see quickly what are the main indicators produced by Eurostat or by any other member states. Voila, this is the state of the art, and so the project is ongoing, and it will be produced soon. Thank you.
Thank you, Cristiano. Thank you to all of you. We are actually at the end of the time, but I received some questions by mail. So just very quickly to you, Cristiano. So a student is asking, I didn't understand exactly how is the hash performed. So there is a specific software for this?
The hash can be calculated by anybody. You can go on the internet and write calculate the hash on a file. Then there is the hash calculator. You upload the file and you calculate the hash. There are different algorithms to calculate the hash. There are MD5, for example, is one of the most popular. SHA 256 is another one. So you choose the algorithm that you want to use, and then you upload the file, and there is a mathematical function that is applied. It can also be calculated by Python, for example, locally without uploading anything on the web. Just run a small script and calculate by yourself.
Okay, thank you. And then there's a question, I don't know who wants to reply, or Xavier, Olivier, or also you, Cristiano. So the question is, can a blockchain become inefficient in the long run? So I think it's some ideas if you are...
If you wish.
Oh, Olivier, yeah.
Yeah.
Or I can go as well. So Olivier, please.
I'll go first with our side of thing. I don't know exactly what is meant by inefficient as such, but for sure, I mean, one side of efficiency that is being discussed a lot in capital market at the moment is like energy inefficiency, in the sense that when we launched our project, for example, 2-3 years ago, I think the use of the Ethereum blockchain, given the maturity of the technology stack, was like a go-to choice. The debate may be a bit different today because some contenders are up and coming and getting much closer to the Ethereum ecosystem. But I would say that it's considered more and more, and that's very important to EIB, obviously, that the use of like energy hungry blockchains makes them inefficient. So, I mean, I didn't know if that's the sense of the question, because there could be many meaning to an inefficient blockchain. But I would say that when we see the stage of development of the industry in the capital markets in connection to blockchain, that's one of the main axes, for example, that we're looking at the moment. Like, we need to find blockchains which consensus mechanisms are less energy hungry. And that's one of the main axes. And another axis we're looking at is like in the use on capital markets, what is the right balance between public and permission blockchain? Is it efficient to work only with open public technologies, or are they piece of a very regulated environment like capital markets that needs to be run at least partly on private blockchain? So that's another side of like how efficient are we going to make the overall market infrastructure that we're looking at.
Okay, thank you. Cristiano, would you like to add something? Or
I think another consideration can be done as a storage space, because the blockchain is like Xavier showed, you add the blocks on top of blocks already existing, and so you store practically all the transaction from the beginning. Just to have an idea, the blockchain of Bitcoin is now 360 gigabytes, so it's quite big. There are blockchain that are, but okay, of course, there are transactions since I think 2008, if I'm not mistaken, or even before. So for that reason, there are blockchain that are smaller because were launched after. And in particular, for the project of official statistics, we are using EBSI, that is the blockchain launched recently by DIGIT, the Directorate for Informatics at the European Commission. It's based on Ethereum, but doesn't contain all the transaction of the cryptocurrency because it's a public blockchain for public projects, and it's much smaller.
Okay, thank you. A very last question that I also received, I think, for you, Maria. So there is a link between the European Investment Bank and the European Central Bank.
Yeah. Okay. This is actually it's a good question because I have gotten this question
because now I would like to ask that our last webinar we had the speaker from the European Central Bank, actually the statistics officer. So that's why.
I mean, of course, I don't know all the links, but to be very clear, I mean, the European Central Bank deals with monetary policy, and we are an investment bank. So what we do is that we typically lend money to projects, meaning that, I mean, we build bridges, we finance the real economy, but obviously also the ECB can, or maybe Olivier, if you want on how the ECB then buy our bonds, for example.
When actually there are restrictions, very strong restriction on central bank from the Euro system, EU system, like buying EIB bonds, because and there's a cross institution relationship that could reveal some conflict of interest, and there are other considerations as well. So actually, at the moment, like our bond issuance in primary markets, at least, are only bought by central banks, which may be in Europe, but outside of the EU system. So think, for example, about Norway, and even though relationships are not as established yet with the Bank of England now, technically speaking. So, but I think, for example, Norway is a good historical example, at least.
Okay, thank you. I think it's time to close here. So I will thank you very much, all our speakers, for this very interesting presentation. And many thanks also to all our participants. So the slides that were used for this presentation are already available on the EMOS 2020 events website, while the recording of the webinar will be available on this YouTube channel. You will shortly receive the email address that you use for registering to the webinar, the link to a short survey about today's webinar. We really appreciate your feedback to further improve our webinars. And the next webinar is scheduled for next week on Friday, the 3rd of December, when Duncan Elliott and Craig McLaren from the Office for National Statistics of the UK will be presenting on seasonal adjustment of daily and weekly time series. So thank you again to everyone, our speakers, our participants, and have a nice evening. Bye-bye.
Thank you.
Bye-bye. Thank you. Bye.
Bye. Bye.
Thank you. Bye.